Hello and welcome. This is the midweek edition of Business Incorporated coming to you live from Lagos, Nigeria. Thank you very much for joining us. I'm Chimeze Obi Iwago. It's a week of interest rates decisions as Rwanda Central Bank joins Nigeria and Ghana to hold its key repo rate at 6%. Construction firm chases oil taxes and royalties in $1 billion Congo debt row. Plus, Chinese car maker BAIC expects first vehicles from its South African assembly plant by early 2018. We'll get started now with the markets here in Africa, and all the markets we track on this program, but for Egypt, we're looking green at intraday. The Nigerian stock market index reversed losses to gain 0.52% at intraday. And the South African market was also up 0.18%. However, the market in Egypt slipped 0.22%, while Kenya closed up 0.18% on Tuesday. And car insurance and rental companies were some of the chief gainers in a generally weak Saudi Arabian stock market today after news that women will be allowed to drive. King Salman on Tuesday issued a royal decree lifting the driving ban. It will be implemented by June 24, 2018. There are about 10 million women, including foreigners over the age of 20, living in the kingdom. Shares in all of the 30 listed insurers that provide auto insurance rose, led by Araji Company for Cooperative Insurance, which surged 9%. Car rental company United International Transportation jumped 6%. Now, the main Saudi stock index, however, fell 0.08% at intraday as investors worried that index complier FTSE might issue a negative decision when it determines whether to upgrade Riyadh to emerging market status at the end of this month. Most blue chips, which analysts believe would become members of FTSE's secondary emerging market index in the event of a positive decision, were weak, including dairy maker Al-Marai, which fell 0.2%. In Qatar, the index fell 1.73%, snapping a 6-day winning streak. All but 3 of the 20 most valuable shares fell, including Qatar Insurance, which declined 1.4%. In the United Arab Emirates, Dubai's index rose 0.02%, as Emma Properties added 0.9%. The Abu Dhabi index was down 0.15%. Move on now to Europe, where markets moved higher in early trade amid some major corporate news and growing expectations of another rate hike in the United States before year end. Overall, market sentiment was dominated by monetary policy, given that geopolitical tensions over North Korea seemed to have scaled back slightly. Let's cross over to Frankfurt for more with Conrad Busen. Good afternoon, Conrad. Thank you very much for joining us this Wednesday afternoon.
Hello, Jimmy. Good to see you again.
Right. Now, Fed Chief Janet Yellen's hawkish tone on how imprudent to keep monetary policy on hold, waiting for inflation to reach 2% is resonating. Are European markets weighing this statement with one eye kept on Draghi's ECB?
Yes, they are, definitely, Jimmy, because we have this discussion here in Europe as well. The problem for central bankers is that despite the fact that, the general supply by central banks to the markets with money is as generous as it never has been in the past. Never before was it so cheap to pay for a loan. And despite the fact that growth rates, economic growth rates, have picked up somewhat, and even wages have picked up, at least in some places. For example, here in Germany, the unions at the moment in the pay negotiation with the bosses are getting quite ambitious again, and wages have increased somewhat. Consumer prices have not been rising as they should have been according to the textbooks. Some pundits say that inflation is happening somewhere else. It's not happening with the products that the central banks are looking at when they consider consumer price inflation, but it's happening, for example, with services, with food that you pay for in restaurants, with rents. And of course, there's asset price inflation. We have seen, equity prices rise to record levels. Here in Frankfurt, the German DAX is not very far away from its record high. And also real estate prices, houses have become very expensive in many parts of Europe, for example, here in Frankfurt. This is where the inflation is, and that's why those pundits think that also the European Central Bank should not take this 2% price target where it considers price stability to happen too rigidly, but that it should consider cutting back its super generous monetary policy, even though the consumer price inflation rate is not as high as it should be. The statements by Janet Yellen gave some backing to the US dollar because they make another rate hike this year more likely in the US, and this of course means that the euro is slightly cheaper than yesterday.